Okay, fine. I have started the recording. So we'll start the chapter accounts payable. I think my voice and screen, everything is clear to all of you.
Yes, sir. Clear.
Okay, fine. So the first thing in accounts payable is your SAP accounts payable or accounts payable is based on subsidiary ledger concept. This is the very important thing. Accounts payable is a chapter which is based on the subsidiary ledger concept, right? So what is subsidiary ledger? We have to understand. There are two things. One is general ledger. Okay, these are the very basics of accounts. Then subsidiary ledger, or this is called sub ledger, right? So there are two things. One is your general ledger, okay, another is your subsidiary ledger or sub ledger. So first of all we will understand what is general ledger, right? Or you can call it GL accounts, general ledger accounts or general ledger accounts. See, regarding the general ledger account is concerned, or GL is concerned, these are really the carriers of your cost, carriers of your transaction. Actually, these are the things through which your accounting transaction is get recorded. Okay, your accounts is get recorded. See, uh, in the process of accounting is what? Accounting is nothing but your recording of the informations relating to your transaction in terms of money, in terms of your currency. And the general ledger is the identifier of your nature of transaction. Okay, so we have already created so many general ledgers in our basics like GL accounting. Okay, so these general ledgers broadly, the nature will be any one out of four, right? Either the general ledger will be in the nature of assets or in the nature of liabilities or revenue or income, right? So broadly it can be either of four. And the most important thing is the general ledger is found place in the financial statement. Only the balance of the general ledger on a particular date that is found in the balance sheet or profit and loss account, or overall I can say in the financial statement, right? And accounting is such a thing. It is the arts and science through which whenever any entry will be passed, one part will be debit and another part will be credit. Okay, and the debit credit is always equal. And the debit, some general ledger will be debited and some general ledger will be credited, right? Maybe there will be involvement of two or more general ledgers. There may be two in SAP terminology. If I can say, I can say in an accounting entry or in an accounting transaction or in an accounting entry in SAP, there may be two line items, one debit, one credit, or it may happens that n numbers of line items may be there. N numbers of line items are there. Multiple numbers of debit and multiple numbers of credit can be there, right? So in case of compound journal entry. So general ledger account, from the general ledger account, periodically we make them balanced. Actually in the computerized accounting system, it is always auto balanced. Balancing has not been made periodically. It is always balanced. So taking into consideration the balances on a particular date, either in the month end or in the quarter end or half yearly or year end, normally what happened, a trial balance is prepared, right? So in the SAP system itself there is also a trial balance. Obviously I will show this trial balance. I have not shown it in GL accounting chapter, but I will show it. So this whenever through the accounts payable. So from the trial balance, then transaction is posted to different profit and loss account and balance sheet in different sites. But representing or making the expressing everything through general ledger or recording the transaction in general ledger is not sufficient at all, right? Let us take an example. Suppose your organizations is dealing with multiple number of vendors or suppliers, right? So all the suppliers or all the vendors, they are called creditors or vendors or creditors. So making a total of all creditors, we create a general ledger account that is sundry creditors, right? Total number of creditors, what is the balance on a particular date. For that purpose, we always create a ledger account that is called sundry creditors. Okay. However, the business, the accounting records doesn't mean that only general ledger. In addition to the general ledger, every organization has to also parallelly record the transactions in other ledger, which is called subsidiary ledger or sub ledger. Okay, and this subsidiary ledger and sub ledger, this is always below the general ledger and it has a direct connection with the general ledger. Let us take an example. Suppose an organization like your organization 7200 Max Pro Industries. Now in the Max Pro Industries, say we have a general ledger account sundry creditors. Okay, and this sundry creditors, say this is a liability for the organization, say 100 300 is the GL account number, right? This is the GL account number. Okay, now on this sundry creditor, it is a GL account. So all the creditors balance on a particular date, that will be definitely appear under the GL account 1,300,000. However, maybe say there are three numbers of data, three numbers of vendor: X limited, Y limited, Z limited. Okay. Suppose X limited on a particular date, they are having credit of say 2 lakhs. Okay. Y limited say 3 lakhs. Z limited say 1 lakh. Right. But in the GL level, that means at the general ledger level or 100 300 level, we can only see the total of this. That is, we can only see at any time total of all, that is 6 lakhs. Okay. However, every business organization, they are interested to find out the sub ledgers, that means party ledgers, where individual vendor balances below the general ledger, right? So very importantly, in addition to the GL maintenance, organization has to also maintain parallelly the sub ledger or subsidiary ledger, right? Because suppose the organization has to pay X limited, so once it will pay X limited, it will pass one entry against X limited, so that what happens, automatically 2 lakh will be nullified from the sub ledger. Once 2 lakh will be nullified from the subledger, just a minute. 2 lakhs will be nullified against the subledger. Here is also what happens. Similarly, from the general ledger also, parallelly 2 lakhs rupees will be deducted. So here the particular vendor X Limited, there is no balance. So the total balance is 4 lakhs, and here is also this plus this, sorry. So here is also the balance will be 4 lakhs. How? This 6 lakhs will be there as credit, and once I pay, then 2 lakh will be nullified, then 4 lakh is already there. 4 lakh credit is rolling, right? So individual credit, here this is individual credit, this is individual credit, and this is the sum total credit, sum total. Okay, so sum total credit will be reflected under the GL account 100 300. However, we have to also make a systematic record of individual vendors. Okay, under individual vendors there may be many invoices. So not only we will keep the subsidiary ledger for individual vendors, but under the individual vendor we will always have bill wise, okay, bill wise informations, which invoices or which bills are accepted, which bills credit memo or return is established. We have, suppose some vendor has supplied such materials which are not as per the quality, then we can also return and pass the credit memo against that particular invoice. Some of the invoices are already due, it has to be disposed of, it has to be paid in time. So control mechanism is very much required under subsidiary ledger or subledger. So though accounting is based on general ledger, but the emphasis on subledger is also equally with the general ledger, because as per the audit, statutory audit guidelines, the auditors not only check the general ledgers, but also they check the authenticity, fairness of the maintenance of subledger. If any organization do not have the subledger against the general ledger and there is a mismatch between the general ledger and subledger, then there will be audit qualifications. In SAP, there is no question of mismatch of general ledger with the subledger, because subledgers are tightly integrated through the configuration process in the general ledger. So anything happens in the subledger, plus minus means anything. If you pay, then it is minus. Suppose you get something, then it is plus. Suppose new bill is generated, then it is plus. So anything that will be for the subsidiary ledger, immediately the impact will be seen on the general ledger. So general ledger and subsidiary ledger or subledger, they are tightly integrated in SAP without any loophole that we bypassing the subledger, somebody can pass the entries. Nobody can pass the entries directly in the general ledger where subledger accounting is applicable, right? So this is the basic funda, very basic things I am telling you, because these things are very much required. These are the foundation type of things. Whenever we will discuss the accounts payable, from the customization, from the end user activity, these basic things should be always kept in mind. Why these things? Why we are doing these things? What is the outcome? What is the system architecture? How things happens? How things are related one to another through the configuration process? How your end user activity is done? How to get the report? What the report is saying? So these are the basic things. In SAP financial accounting, only one chapter directly deal with GL to GL. Okay, GL to GL. Previous chapter, general ledger account. It is nothing but passing like JVs. Everything is through JVs. But practically, there are very few numbers of JVs which are passed only in emergency situations. So, only in case of account adjustment or any very few numbers of JV entries are passed in any accounts. Maybe any organization they pass lakhs of transactions accounting entries, but the JVs will be very maybe in hundreds. So, but those are the foundations. So foundation cannot be escaped. So you cannot build your house escaping the foundation. So we have very extensively discussed the basic settings as well as general ledger accounting, because those things will guide in our future understanding and future chapters, future learnings. So, in SAP, the subledger accounting is applicable for the rest of the three chapters. Not only in accounts payable, this subledger accounting is also applicable in accounts receivable, receivables, and asset accounting. Okay, I am not putting the asset accounting. I am directly writing it fixed asset accounting. Okay, because things can be confused. Asset means it can be current assets also, but current assets it's not the part of it. We are concerned with the fixed assets, right? So what happens? All these three chapters which are remained in financial accounting, accounts payable, accounts receivable, fixed asset accounting, these are purely based on subsidiary ledger concept. Because accounts payable, that means total liability, sundry creditor, knowing of the total liability is not sufficient. We have to know the party wise breakup, and under each party we have to know the bill by bill, how many bills are there, how many credit memos are there. Similarly, in the accounts receivable also, we are not satisfied with sundry debtors, a single figure which appears on the asset side of the balance sheet. But under the sundry debtors, we have to know what are the individual debtor balances, right? Again, under the individual debtor balances, what are the bills, documents, invoices pending? Okay, which are paid, which are pending, which are returned. Every record should be there at the subsidiary ledger level. Similarly, fixed asset. Suppose any organization will be having, say, furniture and fixture. Furniture and fixtures, this is a GL account, a single GL account. But is the organization will be having only one furniture, one fixture? No. There will be thousands, hundreds, thousands of furnitures and fixtures scattered at different places, different offices, different business places. But sum total of furnitures and fittings, they found place in one GL account, that is called furniture and fixture. However, individual asset register, individual asset wise, individual furniture wise, individual fixture wise, record keeping is also very important, because these are part of your accounting statutory requirement. Okay, so you have to maintain the asset register, individual asset register, and the total amount of your asset register must match with the respective GL, right? Total value of the asset register of furniture and fixture must match with the GL account furniture and fixtures GL. Similarly, vehicles, plant and machinery, etc. So these three chapters we will encounter with accounts payable, receivable and fixed asset accounting. We will frequently interact with the subledger or subsidiary ledger. We will see the details party wise, bill by bill, and as well as we will see the balances as a whole, right? So any questions on your behalf regarding this, whatever things I have discussed, because these are very foundations. Any questions regarding this accounts payable?
No, sir.
Okay, fine. So okay, so we will go to, and directly we will go to the customization area, where we will customize uh, the first customization of accounts payable. Step by step we will do the customization of this chapter. Okay, fine. So let us go to the SPRO area, right? So all the customizations we usually do in SPRO. So here is also we will do the customization from IMG or SPRO area. Now previously we are in the financial accounting view. So let us open that. And previously all the customizations we depend on these two nodes: financial accounting global settings new and general ledger accounting new, right? These two things, we followed very frequently in previous classes. However, now we will concentrate on this one: accounts receivable and accounts payable. So open the node. Once I open the node, immediately these are divided into different sub nodes. Here is the customer, here is the vendor. So we are in the accounts payable. So therefore, I will open the next node under the vendors, right? And then I will directly go to the master data. So what is master data? We'll understand. See, in any software, you will find basically two things. One is master data, another is transaction data. Master data is always more or less constant, not changeable, right? Previously also we have already covered the master data, the most important master data, that is GL master. Okay, creation of general ledger. This is nothing but this is the master creation, and this, by using those masters, our transaction happens. Our transaction was possible. Here also in vendor accounts payable, you have to create so many master data. What are the master data? You have to create the master data regarding your individual vendors, vendor number or supplier number. So many master data requirement will be there. Now, first of all, preparations for creating vendor master data. I will open the node, and I will click on define account groups with screen layout vendor. So what is the meaning of this node? Like in financial accounting, whenever we create the general ledger account, GL account, before creation of any GL, we always refer to the account group, OBD4. In the OBD4, we first look to the group under which this GL account will fit. Then only we could create the GL account. Within that range, every group will be having a range, number range. Within that number range, from number to number, we used to create the general ledger account. So similarly, as it is a subsidiary ledger concept, throughout this chapter I will create very few numbers of GL account, but practically you can create n numbers of subsidiary ledger account, n numbers of individual vendors, okay, or individual party. So all the parties are not treated as equal standing in any business environment. Suppose you have so many vendors or suppliers, we have to make some grouping mechanism. Actually, groups are made for the purpose of reporting, instant reporting. Suppose there are some vendors who are belonging to foreign countries, right? So those vendors can be those 5 or 10 or in any numbers of foreign vendors. They have to be under a particular group. Identification of a group is a must. Account group. Under the account group, individual vendors will be created. Some vendors are domestic, they will be created under the domestic vendor group. Some vendors are under spare parts vendor, they will be created under the spare parts vendor group. So it is basically for the purpose of control mechanism, reporting mechanism. Management may instantly try to find out what are the position of, say, your spare parts vendor. Spare parts vendor means in a manufacturing company, spare parts is a must for your machine, otherwise your production will be discontinued or it will be held off, right? So this vendors who are supplying spare parts, the management may want to know what is the position. Similarly, for vendors who are situated in foreign countries also, management wants a report. So if these are mixed up with all, then finding out a information instantly, that may not be possible. So therefore, grouping mechanism is there. Same for the purpose of the same thing, logically, financial accounting grouping is also there. So we will create the account groups, right? So now I will create two numbers of groups. One is 720, so 720F, that these are 4 digits actually maximum. Then say F5 vendor group of 7200, right? So I am creating first group 720F. F means F5 vendor. So what is F5 vendor? I will create two groups of vendors. One group is F5 vendor, another group I will create as vendor. So F5 vendor means, F5 vendor group means, under this group, whenever I will create any vendor master, those vendors directly give for those vendor bills, F5 entry will be directly passed, right? There will be no updation of the inventory. So those vendors, practically in any organization, without update of inventory or service sheets, very few vendors are there where direct bills will come to the finance department. Before coming to the finance department, this bill usually routed through the material management department or other engineering department, where or HR department, where the service part of the bill or material part of bill is checked. If it is a material vendor, that means material, raw material supplier or packing material supplier or spare parts supplier, then the bill first update the inventory, then it comes to the finance department for payment. So in those cases also, things has to be updated through a via route, via material management. Okay, so some bills are coming through the FI, some bills are coming from finally to FI. So I will create two numbers of groups therefore. One is FI vendor group, which I will demonstrate now. Another vendor group I can demonstrate after, say, asset accounting, because for those I have to create the basics of material management and sales and distribution module for demonstration of payables and receivables. So therefore in advance I am creating another one. Click on the company code data button. See, there are three things here. In the field status, three things are appearing: general data, company code data, purchasing data. So what is field status? See, whenever I will create the vendor, individual vendor master, how the screen will look like. Individual vendor screen master, how it will look like in SAP. That will be controlled through this three things: general data, company code data, and purchasing data. So click on the company code data, click on the account management, reconciliation account make required entry, and cash management group make it suppress. Other things let be as usual. So what does it mean? It means every vendor, individual vendor, that will be linked with a reconciliation ledger, or you can call it general ledger. General ledger is nothing but it is a reconciliation ledger of the subsidiary ledgers. So under this account group, I will create the vendors which will be having a reconciliation account. Then click on save. Why cash management group is suppressed? Because cash management is a separate topic we have not activated. This is a subtopic of FI. So therefore, if there will be any problem, if any problem will be shown, so therefore it is suppressed. Then click on the next entry button, 72M, 720M. Now 7200, sorry, vendor group for 7200, right? Material management vendor group. Click on company code data, click on account management, reconciliation account required entry, cash management group suppress, and click on save. Right? So this is the way through which this things happens. I'm possible, it was possible instantly to create two numbers of vendor groups. Some of the vendors where I will do the demonstration, obviously now they will be under the 720F FI vendor group. And whenever I will show the integration chapter, how bills are routed to the finance department through material management, then I will use 720M, not F. F group 720F is will contain only the individual finance vendor, FI vendor, where bills are directly coming to the FI department. Practically, when the bill directly come to the department, when it is not related to any inventory materials, then bill may come, or it is a service bill, directly it may come to the finance department. But nowadays other departments also, they are making service sheets and everything, so there is also a via media, but it can come to the finance department because there is no updating of your inventory, right? So this is the thing. Unfortunately, some participants, they have not joined. This is a very fundamental clash. So I am not more going to the customization area. I will be here itself. I will close the class. Any questions on your behalf till now? Why we make the why we make the reconciliation account required entry? Because we want that whenever individual vendor master will be created, the user has to compulsorily give the GL linking. Suppose I am creating a vendor master X Limited, where when I am creating the name of the X Limited and information relating to that vendor, I must have to mention the appropriate GL account to which this amount will be updated. Okay, this amount will be linked. So therefore I make it required entry. As you know, if you make the required entry here, then automatically the field will be required. That means this account group will control what are the things required at the time of creation of vendor master, individual vendor master. So therefore I make it required entry, right? In MM also, in FI also, the same thing I select it as required entry. FI also I make it required entry. Under the account management, this thing lies. Okay. So let us close this. You will get ample time for practice. We will again start on the uh, very next week. We will start, but till now you can do the practice of the these things as well as the rest of the things. So good night to all of you.